listen to the jargon.
Good morning, everyone. This is James from Dividend Stock Talk, where we talk about investing in dividend stocks and why we do it. Well, I do it for cash flow, plain and simple. Now, I want to jump right on. Wait, before I do that, today is Saturday, October 7th, 2017. It is 9 a.m. Yes, we are trying the morning thing because evening thing, for some strange reason, didn't quite work with my schedule. Anyway, all right, jumping right in, I'm trying to figure out why one day can make a huge difference on your bottom line. Because it can. Now, we were doing great last week. Thursday, we were up almost $5,000. And today, we're not. Anyway, at the end of the day, let's quickly go over some of the positions that we had, what happened to them Friday, because Friday was a very strange day for a lot of them. So that being said, let's jump on in and take a quick look. ACN is the first one we're going to take a look at. ACN. Now, ACN started out the year in the 117 area, just traveled between 114 and 120 for almost 9 months. Hit 128, 129 for a couple of months, but then jumped up to the 136 area and been traveling in the 136 area for over I don't know, close to a month it looks like. All right, so right click on ACN, hit the my position. Okay. Okay, so ACN's position, which all expired today, so it might be a little tough. We were looking at the 134-135 spread, and she closed at 136.25. So we made money on ACN. Okay, yay, yippee. Okay, APA. APA looks like to be in a downtrend for quite a while, but she started out the year at 63.79. Went sideways for about 4 months, and then slow downturn to find the low of the year of 38. Bounces off the low of the year and still in that little bit of a downturn. But we tried to capture that dividend movement, and we were successful. So the Apache Corporation, we had the 44 to 45 spread, and she closed at 45.17. So we made money off of that one also. That makes me happy camper on that. Next, we're looking at Colgate-Palmolive. Now, these companies have been around for over 100 years. They are part of the Dividend Kings, which means they have increased their dividend payments for over 100. They increased the dividend payments for over 50 years, which is a good thing. So every year you get higher and higher dividends. Okay, we have the 72. I'm going to see. How do I look at that a little bit more? I can't really see. My assumption is going to be it's a 72, 72.50, the call. So that would mean that we did make money off of that one because I can't see the rest of the numbers. So if I can slide this over and see if I can see it then. There we go. All right, so we had 72, 72.5 call for Colgate-Palmolive, which means it did hit our target price and we did make money on Colgate-Palmolive. So that's 3 for 3. All right, CVS, I know for a fact we didn't do because they had a crappy day yesterday for some strange reason. I have no idea why. CVS, but I'm going to take a look at it. So CVS starts the day at 80, starts the year out at 86, falls into the trading range between 76 and 81, and as you can see, she hit 76.92. Now, where do we have CVS? Oh, CVS, we just did a covered call. Okay, so we did a covered call on CVS yesterday. Apparently, We got 200 shares at 80.32, but as you can see, she closed at 76.92. Now, there's got to be a reason for Colgate-Palmolive to, CVS to close in that position. And here we go. Today's the 7th, so we're looking at the 6th, seeing a snapshot, blah, blah, blah. Update market, blah, 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 blah. There's nothing on CVS. It's all the market news. Entry into pharmacy, blah, blah, blah. CVS Pharmacy introduces script path. Okay, I don't see why that would make it drop. CVS Pharmacy opens the largest New York City Times Square. Okay, that's not bad news. CVS Insider sells $100 million in stock. That could be it. So an insider sells $100 million in stock. Okay, that could have some effect on it. So why is an insider selling that much stock? Maybe they're just retiring. Who knows? But that, I'm not going to say that's what created the huge drop. No, I'm not going to say that at all. CVS Health moves into limited access to opiate painkillers. Oh, that could be. Now, opiate painkillers, I don't know if that's a good thing or a bad thing, because I really don't take painkillers. So I really don't know. CVS Health expands initiatives to combat opiate abuse. Okay, I can understand that. Response to national opiate abuse epidemic. Limit opiate painkillers. Okay, that could have something to do with it. Okay, CVS Health sets unchanged quarterly dividend. Okay, so it's unchanged. I don't know what that means, other than we're going to get the same amount of dividend that we were supposed to get, because that's what it sounds like. CVS Health sets unchanged quarterly dividends. How would you interpret that? Sets unchanged quarterly dividend. Sounds like it's not changing. Sounds like we're getting the same. I don't know if that's projected for the next year, because I don't know when their fiscal year is, because if their fiscal year ends now, and they're saying we're going to get the same amount next year as we got this year, well, maybe I might not be a huge proponent of that. You know, I might not be totally happy with that. Okay, CVS CVS Health Corporation announces quarterly dividend. Okay, lovely. CVS Health price target announced at 95 per share. Okay, I like 95 per share. So why'd we drop? Why'd we drop to 76? Okay, CVS Health initiated at. I'm reading that right. CVS Health initiated at outperformed by RBC Capital. That's good news. Okay, RBC initiates drug supply chain with largest neutral. Oh, gives an outperform rating to CVS. Okay, that doesn't make any sense, because they're saying that RBC initiates drug supply chain with largely neutral views. Let's put that again. Come on. But gives outperform ratings to CVS and Walgreens. That means they're doing better than they thought. So why did it go down? Okay, CVS Health price target raised to 86 per share from 82. Okay, so if they're targeting the shares to hit 86 opposed to the 82 where they're at, why did it go down? So this is not giving me any good reason why. All right, I spent enough time on this. I'm not getting any logical reason why it dropped, other than the earnings announcement comes out, the dividend play. You know, they say they're going to give the same amount of dividend, and a couple of analysts saying, hey, we're shooting for a higher target price for CVS. Okay, great. All that is good news. All that should keep the thing sustaining at the same level that it's been at. All right, so I did a covered call. We got in at 80.32. So most likely, come Monday after the market opens, I'm gonna sell off the the covered call again and see what we can bring in for the second time on CVS. It'll be week number 2 in CVS. Okay. DG. Let's look at DG. DG had a bad day yesterday also. She starts out the year at 69. She trades in a range for the whole year. Let's open this up a little bit more. All right. She trades in a range all year between 68 and 77, but that is a classic sideways trend. You know, you sell it when it's the high 70s and you buy it when in the high 60s. All right. You buy it at 70, sell it at 76. 70, 76, 70, 77. It's like back and forth, back and forth, back and forth. Okay, anyway. So the last month she busts out and she hits the 80 area. She hit the high of the year of 82.38. But yesterday was a down day. Why was yesterday a down day for Dollar General? I don't know. Okay, so where were we with Dollar General? We had 80, 80, 50. So we were just a tad bit off 80.50. Had I been paying attention yesterday rather than working, I probably could have saved off a little bit of stress on that, because it looks like I'm going to lose on Dollar General, and I don't like losing. So you got 4 winners and 1 loser, Dollar General. But it's not a huge loser, and had I been better prepared, and I'm going to apologize now that I wasn't available at 3:30 yesterday to actually fix that mistake. Well, that being said, let's move on to EOG. EOG is another one. She starts out the year at 96. Trades in the 96 area for about 2 months. Jumps up to find the high of the year at 109. Then from the 109, slow downturn to hit the low of the year at 82. Bounces off 82. Settles into the 96 area. Now, it had an up day yesterday. So yesterday was an update from the market maker's open, but the market maker opened a lot less than she closed yesterday. She closed She closed Thursday at 96.55. So you would assume, now this is the crazy part. You would assume you had an up day on Thursday, and you close at 96.55. So what would possess the market maker to open at 95.79? It's a lot less than she opened, and then she closed the day before. She had an up day, but that doesn't mean squat to us if it closes lower than it closed yesterday, and the day before. Sorry, Thursday. Anyway, she closed at 96.19. And we had the 96.50. So this is the one that I bought back, the 97 calls. So we're going to end up owning 5,000 shares of EOG at 96.50, which, if you think about it, kind of a dumb move because it's at 96.19. I didn't want to lose the money, and apparently I lost the money anyway. So it doesn't always go right for everyone. All right. If any of you guys lost money on that, I apologize. I don't mean to laugh. I'm just laughing at the situation because it's basically a game. You find out the numbers all work. And for some strange reason tonight, and I try not to figure out why market makers do what they do. I mean, come on, look at it. She closes at 96.55 on Thursday. There has to be a good reason why the market maker would open it's almost 75 cents less on Friday. Why? Why would the market maker do that? Does he know something that we don't know? More info on, let's look at company news for EOG. EOG Resources sees non-cash net loss of $6.6 million on derivative contracts. Okay, that is, yeah, but was that early morning? Or was that after the market opened? Now, did he get that information on the 5th? Because he got it yesterday. But what time did the market maker get it yesterday? Okay, EOG Resources files 8K regulations FD EOG app. So we'd have to take a good look at that. And again, when did they file it? Did the market maker have access to this information before it was public? And if that's the case, then the market maker is just right. Rightfully so, to drop it 75 cents. All right. How much information do we want to look on this? EOG Resources file that downgraded for September. Okay. Totally top upgrades, downgrades for September 28th. Yesterday was October 6th. What are they talking about? That's why. Benzinger. So there wasn't that much information on EOG yesterday. That was just two pieces of news. Yeah, just two pieces of news. They filed their 8K. All right. So they lost 6.6 million on derivative contracts. Some strange reason people aren't doing contracts on EOG. Alrighty then. Moving on. All right, so we're going to own 5,000 shares of EOG come Monday at 96.50, and let's get a quick look at what they might be worth. EOG. And we want to look at the singles. All right, the single option, 96.50. I can live with that. 74 cents per share. So I sell it at 74 cents a share. That means I'm actually selling it for 96.50 plus the 74 cents a share. That's 97.24. I can deal with that, buying it for 96.50 and selling it for 97.24. Thank you. Anyway, we'll see what it opens up on Monday to actually see what the what the covered call is going to be actually worth, but we won't know until actually Monday. But I only lost 158 on that position, which if you think about it, that's not a whole heck of a lot. All right, so I had to spend some money buying back the option, and then the stock went down a little bit, and I lost 158. So let's see if we can make it up when we sell the covered call on that. So we're looking at Lowe's next. Now Lowe's is another one we did a covered call on. LOW. Lowe's starts the year at 71. Takes about a month for it to find the low of the year at 65. Comes off 65 and hits 70, almost 73. Trades for a couple of months in the 73 area. Jumps up to 81. It travels for 2 months to 81. And after that, finds a high of 86 for the year. They get some profit taking or downturns, whatever you want to call them. But she's settling in at the 81, 82 area. Hits a high at 82.74, and she had a down day yesterday, but we bought it at 82.32. So I wonder what that one is worth for next week. 82.32. So I'd sell the 82.50s, and 82.50 is only worth 37 cents. But what did I pay? All right, I bought it 82.32, correct? Let's view it one more time. All right, so 82.32, and if I sell the 82.50s, that's another 37 cents. So I'm going to get between the 37 cents and the difference between 82.32 and 82.50. What is that? 28? No, 18. Yeah, 18 and 37 is 55. So 55 times 100, that's 55 bucks. Yeah. So I profit 55 bucks. But I did sell the option on it yesterday. So I sold the covered calls last week for Lowe's. So I made money on that option. And I'll have to check and see if I can quickly see that. Fill order. Account statement. So you can see our trades. Oh, well, look at that. Holy snikey. I got 100 shares of Lowe's at 82.32. I got 200 shares of CVS at 80.32. That's weird. 82.32 and 80.32. Okay. I have 5,000 shares of AT&T at 38.50. 5,000 shares of Dollar General at 80. 5,000 shares of Oracle at 48 and 5,000 shares of Verizon at 48.50. I'm going to have to do some interesting finagling come Monday and get rid of some of this stuff because I know at the valuation of $1.1 million, I don't have that in my account, so I'm going to have a huge T-Reg call. That means you need to send us money now or we sell stuff for you. Can't have that happening, so I'm going to have to find out where these things open up on Monday and sell some and do some covered calls on the others and see which ones I can actually carry, because I know I can't carry Dollar General. That's a valuation of $400,000. Oracle's at $240,000 and Verizon's $244,000. So out of these four, I know I can only carry one of them. It means I have to get rid of three of them. So that being said, let's go back to see what we're doing. Oh, I was looking at my trades. We were just talking about Lowe's, so let's take a look at Lowe's and see where we stand with Lowe's. As you can see, I did quite a bit of trades this year. Come on. Let's get down to the L's. All right, here's Lowe's right here. Now, Lowe's, we still have a position. So that's why you're reading these numbers over here. But this column right here is my profit and loss year to date. So I'm $951 profit on Lowe's because I traded Lowe's quite extensively throughout the year because it is a dividend king, number one. Number two, they always show great on the software. And it's a household name. Everybody knows Lowe's. So I'm still in the positive with Lowe's, which is a good thing. I don't know if I should go into some of these. And oh, look at that EOG. I'm $120 in the negative with EOG. So I'm going to have to make me some money on EOG this coming up week. Okay, so let's get back to where we were. So Lowe's is looking favorable. We should be able to make money off of Lowe's. Let's jump in and look at Marvel. MRVL. All right, Marvel starts the year off at 13.13, trades about a month and a half there, finds the low of the year at 12.28. From there, that's like a classic stair step. You know, 1 step, 2 step, 3 step, 4. She's at 18.20. She hits the high of the year at 1872. Now, here's the same thing. I don't know if these market makers are related or they're best buddies or they both had a bad cup of soup last night, the night before dinner. But she closes on Thursday at 1837 and she opens on Friday at 1815. Okay, she's in a nice little uptrend. Look at this. Okay, higher highs. Everything's going higher and higher and higher. And then all of a sudden, got to be news for this. MRVL. Let's take a look. Why did they do it? Oh, so anyway, there's no sense even looking at it because our position was 17 and a half. So it closed at 18.20 or yeah, 18.20. So we made money on Marvel. So whatever the reason the market maker had for closing is really irrelevant because we actually made money on Marvel. I don't know about you guys. If you have any questions, let me know. Oracle, let's take a quick look at Oracle. ORCL. Oracle starts the year off trading in 86 area. She does that for about 3.5 months. Jumps up to the 45 area and travels there for 4 months. And then jumps up to the 50 area and travels there for 4 months. But hits the high of 53. Does a drawback to settle into the 48.40 area. I'd be bummed if I was at 48.50. And I was. Look at that. I'm 10 cents off the mark. Anyway, I'm going to be the proud owner of 5,000 shares of Oracle come Monday morning. So let's see what happens at that. And what is the 48? Wait a minute. I'm going to own it at 48. ORCL. Okay. So I bought Oracle at 48. So it closed at 48.40. Now, I'm hoping, crossing my fingers, see that? Crossing my fingers that market maker will open Oracle higher than 48. That way I can eliminate Oracle first thing Monday morning. because I know I can't carry it all week long. Because the T-Reg, anytime you go over on, you have more trades than you have money available, you're going to get what's called a T-Reg call, which means they want you to send in more money to maintain your positions. And I know, sure shit, I don't have $1.1 million available to send in. So anyway, Oracle closed 48.40. So as long as she closes above 48 come Monday, I'm going to sell it right off the bat. So you know what? I'm going to do that right now. Closing position. Oracle, 5,000 shares at 48. Now it's going to give me the best price over 48. So if she opens up at 49, they're going to sell it at 49. If she opens up at 48.01, they're going to give it to me at 48.01. But you know, they're not. It's not going to open up at at 48.50, and the market maker say, you know what, I'm going to keep all that money. I'm going to sell it at 48. No, the market maker gives you the best possible price there is out there at the time of the market. So I'm looking at 931. That will probably end up filling. That's usually when all the open orders get filled. All right, so we got Oracle. Get rid of Oracle. What else did I have? Come on, let's move up. Move it on up. All right. AT&T, DG. All right, DG. Let's get Dollar General at 80. Did I already cover DG? I did. All right, so let's get rid of okay. 80. All right, so I bought Dollar General at 80. So anything at 80 or above, they're going to fill that one. So let's get rid of Dollar General also. What else do we have? No, wait a minute. All right, so we got Dollar General and Oracle. We haven't done AT&T, we haven't done Verizon yet. All right, let's move over to what's next after Marvel. We looked at Oracle, AT&T. Here we go. All right. AT&T starts out the year at 38.97. After a couple of weeks trading there, she drops down. It looks like she's finding resistance at 36 because you get a triple bottom. You have 36 here. Last November, you got 36 in July, and you also have 36 in September. So 36 seems to be support. After a couple of weeks, she hits 43, which is the high of the year, settles back down to the 41 range and travels for 4 or 5 months there. Drops down to 38 range, and she's been at the 38 range for the last 6 months, finding the low of the year back at the whatever it was, 36, I believe it was. Huge down day. All right, I don't see if it's a huge down day or not, but the market makers seem to have, again, these must be triplets, brothers, you know, or sisters or relatives or whatever. But again, the market closed for AT&T on Thursday at 39.51. So why would the market maker open up at 38.84? I'm sure he has his reasons. I'm sure of it. All right. What interesting things happened for AT&T Friday? Jim Cramer advises his viewers on TiVo, AT&T, and more. What does that mean? What did old Jimbo have to say about AT&T on Friday? All right, BZ pre-market imbalance update, HP 2000K, sell shares, blah, 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 AT 100,000 shares to buy, blah, 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 big breaker. What does all that mean? It means nothing to me. China Mobile looks cheap, but there's the catch. Oh, I'm not doing China Mobile because they're not where we're looking to go. Okay. AT&T files 8K, changes executive management. Okay, that could be a good reason for dropping the price. That could be. Invest nearly $3.9 million over 3-year period. It's only $1 million. What? $1.3 million per year to enhance local network. Indention? What the hell does indention mean? Okay, AT&T CEO pledges to keep telephone company culture out of Time Warner. Okay. Dangles prospect a price cut with Time Warner. Vanity Fair Summit on Time Warner deal. We're buying a business that we don't have. Okay, AT&T nearly $3 billion over 3-year period to enhance local networks in Illinois. Okay, that sounds a bit better. Illinois are getting $3 billion, but why is Dension only getting 1 point something million a year? All right, anyway, so AT&T, it could be a good logical reason for them to drop the price come Friday, but come Monday, let's see what happens. And we are into AT&T at 38.50. So let's get rid of AT&T. $38.52. I can go $38.52. Why not? Buy AT&T. See you later. Right now, I don't want to take a picture of that. I just want to. All right, so we're selling at AT&T. If you order at $38.50. $38.52 because we bought it at $38.50. So $38.52 is going to give me a couple extra $100. So I'm not losing money on that deal. I lost money on the spread, so I can make money back on the actual sale of the stock. Okay. Time Warner. Look at TWX. Time Warner. Let's get out of that. TWX. Time Warner. Time Warner is a pretty looking chart. She starts out the year at 79, only trades a couple of weeks at 79, and then she jumps from 79 to 87, which is nice. Trades at 87 for a couple of weeks, and then just nice, slow up to 103, 104 area. Actually, it's a high of 103.90. Now, here's another one. The gap's down. I mean, it gaps down and opens lower. But fortunate for us, they had a nice move. So we were in the 101, 102 area, even though they opened lower on Friday, Time Warner. We're still out because she closes at 103, and we had the 101, 102 area. Okay, so we made money on Time Warner. Verizon, I know we got stuck with Verizon, so where are we with Verizon? Verizon starts the year at 52, at 50. 25. After a couple of weeks, drops down to 48, 46. And then a couple of weeks later, she finds a high of the year at 54. And then from 54, she tumbles. It's kind of like Jack and Jill go tumbling down the hill to the low of 42.82. Is that right? Yeah, 42.80 is the low of the year. But settles back into the 48 area where she started out the year. And another big drop for the opening. AT&T closes on Thursday at 49.77, but on Friday she opens at 49.04, which is a huge lower than the close of the prior day. So, and the position we had for Verizon is 48.50, 49. So we're into Verizon at 48.50, and she closed at 48.81. So you know what? We are going to sell off Verizon at 48.76. Yeah, wow, sure, why not? Because we're in it at 48.50, and this is what the price they're asking for it. So there you go. Back to monitor. So we have 3 of them we're looking to get rid of. Let's quickly take a look. We got 5. Which one didn't I do? I didn't do DG because we're into it at 80. And I don't think... No, we did DG. EOG. Is that the one? All right. T, DG, Oracle, and Verizon. DG. Oracle. Okay, so let's get rid of Oracle. Okay, we're into Oracle for how much? Oracle, we're at 48, so let's get rid of Oracle. At 48, let's get rid of that. Now, we could do covered calls on all these, but by doing the covered calls, we're not bringing in as much as we could if we just get rid of them and jump into different positions. Okay, because, yeah, we got Lowe's, we got CVS, but we're going to wait and see what the market opens up with them before we do the covered calls on them. But other than that is where we are. Our profit year to date is down to 65. Now, we did close on Thursday at 71. So as you can see, we're down 6,000 from Thursday night. But, you know, it is what it is. Still 65% for the year is not that bad of a deal. Anyway, all that being said, let's check and see if we have any questions. If not, we can just move on, and we have no questions, which is a good thing. So this is James signing out from Dividend Stock Talk. You guys have a great day, and I will see you tomorrow when we go through some of the new trades for Monday. Have a great day. This is James. I'm out of here.